Hey, good afternoon. Trader Tim doing a trade recap here from E-mini Mind, and it is September 16th, 2021. A couple of interesting things to note on the daily chart here is, this most recent pullback. While yes, we've just pulled back to the uptrend line, just like we've done here a whole bunch of times. The difference about this one is that it's taken a little bit longer. There's been more down days over the course of this pullback. So while most of these other ones have only been 2, maybe 3 days, and then we get this strong rally, this one has had a little bit more sustained downward time. So we're still just at the uptrend line. A little bit other important thing to note is the increase in volume on the move down. But have a look at this. I was chatting with the trader, and he pointed out all of these bounces have occurred right around the middle of the month, 19th, 19th, 18th, 19th. If you go back to the summer calendar, all of those dates, 19th of August, 19th of July, all of those are right around expiration, that third Friday of the month. June 18th is expiration. May the 19th is 2 days before expiration. So it's possible that the Fed is doing their bond buying and sort of some of their infusion of cash into the markets towards the middle of the month, and that could have fueled some of these strong rallies off of the trend line at that point and all these middle of the months here. But nonetheless, could just be a bit of a coincidence, but we are right here at the trend line at approaching expiration, and tomorrow is that expiration. So our September contract in the ES will be no more, and then next week, Tuesday, Wednesday, is the Fed meeting announcement. So you also might have, because that meeting announcement is coming up, the Fed just not buying as much, kind of starting to ease off the gas a little bit, and that's what allowed for this pullback to feel a little bit more sustained. What you will notice is that the VIX has not really spiked at all. I mean, we had this jump on the 10th, and then we've decreased from there. And if we look at the S&P, the 10th was the biggest down day in the pullback, but then S&P's gone a little bit lower, and then volatility has actually decreased. So could be basing a little bit here, and if we do get a bounce, it's likely from here until the Wednesday Fed meeting that things might go into a little bit more of a limbo and more of a holding pattern, but you never know. Let's go to the intraday chart from today. I just wanted to run through a whole bunch of trades from Thursday today. So this is what the 5-minute chart looks like. Not a huge gap, but a little bit of a gap down on the first 5-minute bar, and then kind of rallied, filled that close, and then slid most of the morning. So if we start on the 512 tick chart, right at the open, there was a low tick at the day let's see here. That's Wednesday. Low tick of the day. Go back on the chart. At this 46, at this little double bottom here, the first leg right here. But when I drew up the retracement, by the time I got the drawing up, we were basically on top of the 50%. So I wasn't able to get into that as a long. It did trade up to the target, and then we broke down from there. What I would note about this one is when you draw the opposing short, see how we are not touching it yet, and so it's okay. I wouldn't like. So I didn't get in here. I don't like this as a long because the short has now become in play. It's trading, and so you have a stronger chance to break down, especially being so early in the day. The chance of that low tick at lows being the low of the day was not very good. So then we came into right about the top of the hour at 27 minutes in, we had another low tick down here, and this one traded nicely at 57 and took that one, traded up to the target, but then didn't really get much more momentum after that. It was 57, so we still had 3 minutes for the top of the hour. I'm okay with putting a trade on then. I'm not a big fan of putting a trade on like right on top of a news announcement. So this next short here was right at the top of the hour. So you just kind of have to weigh, okay, am I willing to risk getting just spiked out and then have it go my way and just not be in the trade, or just let it pass? You could, kind of wait for that to pass the top of the hour and then just start drawing some of the next ones here and try to get in. After that, we started to dive a little bit, and then at 7:05, we had another low tick of the day, and go forward here at 7:04, actually 7:04 in the NYSE tick, 7:04 in price, and I'm after I start to see one or two counter trend trades fail. You do start to run into a bigger chance or a better chance of going into a trend day. The slightly different scenario about today is that if you look at the low tick at 46, we bounced for a solid 5 minutes. I know that's not a very long time, but it's not like we made a low tick and then immediately broke lows. We did get some momentum to the upside. So seeing that, and then same with down here, some momentum to the upside. And then over here, when you get another low tick, you would expect some momentum to the upside. And so seeing that as the pattern, if you took this 44, 46, 75, it's okay because you're not just trying to pick lows. You're seeing that there has been momentum with a little bit of a follow through on those bounces. But the downside was definitely gaining more momentum. So there were a couple of counter trend trades this morning, but then by and large, the overall trend just sliding lower all morning. The next one I have in my notes here is 7-Eleven. So then here, I liked this as a short. Well, let me say that a different way. I like the potential to get this bounce and then see us move lower. The trouble was when we have a long setup that stops right at the 50% and that trades first, then the short is less likely to succeed. Now in this case, the short did overpower the longs. So if you add in that subjectivity layer, this is where it really comes into play. If you're in a situation where there's two 50%, you kind of have to just go back to the larger trend, and that's where having the 5-minute chart is helpful. But this is where some traders can get stuck or just frustrated because your identification of the trend, even that is somewhat subjective. And so, sure, there's, drawing up a 50% retracement with 2 anchor points is pretty mechanical, but determining, okay, which direction am I going to trade, that's where I rely on the larger time frame. So then the last trade I wanted to comment on is later in the morning. And when you get a situation where you have a large retracement drawn like this, And this kind of just barely broke the 61.8. If you don't have an opportunity to get in, so like this first one just barely broke the 61.8, so I didn't take that as a short. I was interested over here. If you draw like this, but if you do want to wait for a little more confirmation, you can straddle the 50 and the 61.8. So like this is a long that's drawn on the screen. You could draw up the short that starts above the 50 and goes to below the 61.8 and take that as sort of like the second or third one in the micro trend and try to ride that, ride it as long as you can. So those are some different places to look for setups. The top and the bottom of the first 30-minute range are also really good. So like today, this was the bottom of the first 30-minute range. And so looking for trades around that price level is also a good place to look. An hour into the day, looking for seeing if there's some sort of signs of a bounce or a reversal is another good spot to look for trades. So if you can kind of filter or narrow the time window that you are trading and then filter out the trades to, okay, I'm going to take, double tops and double bottoms that occur, drawing 50% that have some sort of double top or double bottom that occur near the prior day's high-low close, the top and bottom of the first 30-minute range. That can help filter out some of the noise so that you're not stuck taking 50 trades a session and just kind of getting steamrolled at times, or just feeling like you're in, you're out, you're in, you're out, and that can just become really exhausting. So if you have questions, drop them in the comments below. I hope everyone has a great weekend, and next week's live trading session will be on Thursday, so we're going to do it the day after the Fed meeting announcement, and you can tune in to that over at eminimind.com/VIP. Thanks everyone, and have a great day.